benefits of DSCR loans. Hey, what's going on, everybody? Jeff from the YouTube channel, Jeff the Mortgage Pro here. Thanks so much for watching. Really appreciate that. Do me a huge favor. If you really like these videos, go ahead and click on that like button down below. And I'd love to have you as part of the community here for subscribers. So go ahead and click on that subscribe link too if you want to see more of my videos as they come out. Let's talk today about the benefits of a DSCR loan. And I think there's a really great way. These are such great loans. There's so many benefits that you can mention. I'm going to try to stick to about 7 or 8 of them here. But what I will say is just remember what a DSCR loan is first. DSCR, remember, stands for debt service coverage ratio. And what that means is that instead of looking at personal income to qualify for these loans, we're looking at the income of the property itself. Okay, so that's what a DSCR loan is in general. Let's start with going through the benefits of DSCR loans here. And the first one is kind of what I just mentioned, is no personal income verification is required. So with the debt service coverage ratio loan, we're looking at the income of the property versus the expense of the mortgage payment going out against the property. That's it. Now, obviously, when you're doing real estate investing, there's a lot more to it than that. There's more potential sources for income other than the rent. Oftentimes, you could rent space out. You could do lots of different things to get more income coming in from property. And the same thing with expenses. You might have, water, gas, sewer, electric, et cetera, et cetera, et cetera. And a lot of times you can pass that stuff on to the client, which is great if you can, but sometimes you can't. And so you would still want to factor that into your calculations when you're trying to get a DSCR loan for investors. Okay. But no personal income verification is the big number one thing that I want to talk about here as a benefit for getting a DSCR loan. The second one kind of goes along with this. It's investor-friendly qualifications. So again, because we're not using any type of personal income, no tax returns, no W-2s, no pay stubs, none of that stuff has to do anything with the DSCR loan that we're going to be working on. So it's based off of the cash flow of the property itself. And typically the better the cash flow, the better that we're going to have for interest rates. A lot of factors go into that as well. But, typically the more cash flow, the better pricing that you're going to get on your loan going forward. So this is totally ideal for people who don't work, people who are self-employed, because they don't want to deal with all the extra paperwork of, trying to get a conventional loan on some of these properties. The third benefit here, unlimited number of properties. Now, if you buy property, let's say you buy your first property with an FHA loan, you can only have one FHA loan at a time. Okay. If you buy your first property with a VA loan, you can only have one VA loan at a time. Well, in some instances, you can have multiple VA loans as long as you have enough entitlement, but you get the idea. Conventional loans, you can have a maximum of 10 conventional loans when you're buying property. But if you started to scale, try to get bigger than that, then you cannot get any more conventional loans going forward. 10 finance properties is the very maximum you can get. The biggest benefit about DSCR loans when you have multiple properties is that it doesn't matter how many properties you have, because we're looking at the property specifics to the one that we're financing. So whether you're doing a cash out refinance or a purchase, the property itself, you can have an unlimited amount of properties. I've seen clients with DSCR loans on 100 different properties before. So it's definitely doable that you can find lenders that will do loans on all of these, as many properties as you have, because it's about the investment, not about how many properties you have going forward. Benefit number 4, flexible property types. So you can buy single family homes, you can buy condos, you can buy townhomes, you can buy PUDs, you can buy small multi-unit properties, so 2 to 4 units. All of these things fall into the category of DSCR loans. So we have lots of the ability to buy different types of properties when we're doing these things. You can also buy short-term rentals. You can buy long-term rentals. So all those things, even, when we're asking about what type of loans you can do, there's lots of flexibility in the loan types. And believe it or not, you can actually do 5 to 10 unit, like small apartment buildings with DSCR loans as well. They would be considered residential DSCR loans. The appraisal process for those is a little bit different, but at the same time, you can still qualify with the residential DSCR loan, which is just income coming in versus the expenses coming out. If you were to do a commercial loan on those types of properties, you're looking at all sorts of stuff. Net operating income, you're looking at the cap rate, all the expenses, like all that stuff has to do with, trying to do those when you're doing a conventional loan. But for DSCR loans, for residential DSCR loans, it doesn't matter. So flexible in the property types that we're doing for these types of loans. The only one that I will mention that it's really, really hard to do DSCR loans on are mobile homes. And you can't really do them on land either because it doesn't have a value that we can do a DSCR loan on. It's hard to produce income from raw land in the traditional sense. Okay. Number 5 benefit is you can go to higher loan amounts on these things. So DSCR loans really don't have jumbo limits. Like I've seen loans up to $3 million before for DSCR loans. Particular short-term rental properties, sometimes they're really a lot more expensive. They're in, prime locations, but they're going to generate so much income to pay back that mortgage. It's going to be crazy. So big loan amounts don't matter for these types of things. Number 6, there's easier refinance options. And what I mean by that is that you can refinance based off of the property's performance and not necessarily your personal income again. So this kind of goes back to the number 1 and number 2, the benefits of DSCR loans here, where we don't have to have any personal income. And the same thing on a refinance when we're doing these things. So it's easier to refinance because it's really dependent on the performance of the property. If you're going to get, here's even a better thing. When you're doing an appraisal on these things, if the rental income from the appraisal called the 1007 comes back and it's greater than the lease agreement, we can go with the greater of the two, the lease that you have in place or the projected rental income from the appraisal on the 1007. So, easier to refinance on DSCR loans versus other types of loans. I would say that these are, for benefit number 7, faster closings in general. For the most part, since we're not digging through tax returns, there's a lot less to do in terms of paperwork. And usually that's the biggest thing whenever you're trying to qualify for somebody's loan is the ability to repay. So when you're qualifying with income, it could get really, really complex. I've seen, high-end business leaders, people with just hundreds of pages of tax returns. And I've seen them on paper that doesn't show like they make any money because they write everything off or they run everything through their business, right? But in general, with DSCR loans, we don't see that. Like you don't have to worry about anybody's personal income. It's literally about the income of the property itself. So typically 30 days or less is how long we need to close these things. Sometimes they're even faster as long as we get our paperwork in there. And it really just depends on the appraisal and how long that takes. If the appraisal happens really fast, then we can close these loans, relatively quickly compared to other types of loans as well. And lastly, what I'll say for another benefit of DSCR loans is they are great for scaling a portfolio. So it kind of goes back to one of the other ones there where it doesn't matter how many properties you have financed, you can get as many of these properties as you want. So since we're qualifying just on the principal, interest, taxes, and insurance monthly payment of the property against the expected or projected rent of the property, we can get as many of these as we want going forward. So they're really great for scaling a portfolio. If you hit that maximum 10 conventional loans and you want to start buying some more, you can absolutely use the DSCR loan. So the great loan for scaling. Okay. So those are 8 great benefits here of DSCR loans. I hope you found this helpful. If you really like these, please go ahead and click on my calendar link below. I'd love to chat with you about your investment property purchases with the DSCR loan or investment property financing with DSCR loans. I feel like I've become kind of an expert and I'd be glad to help you out. Thanks again for watching and I will see you on the next show. Have a great day.